So far, when we are computing income under the head salary or any other head, what we are doing income from head salary, let's say HRA, house rent allowance received, minus exempt, balance taxable. Conveyance allowance received, minus exempt, balance taxable. Contribution to provident fund, less employer contribution, less exempt, balance taxable. Interest on provident fund, less exempt, balance taxable. Everywhere we write only the portion which is taxable. Now wait a minute. When the direct tax code comes, everything which the employer gives to the employee, barring few items, will be treated as gross receipt. Now there is no question of exemption. There is going to be deduction. Now if you receive, there is a contribution by the employer to the provident fund, it will be treated as your income. Don't worry, it will be treated as your income. If you have received any transport allowance, it will be treated as your income. If you have received any conveyance allowance, it will be treated as your income. If you have received any house rent allowance, it will be treated as your income. If you have received any contribution to superannuation fund, it will be treated as your income. Or a contribution to pension fund will be treated as your income. First, it is your income. Now claim deduction. What is the deduction? Number one, if there is a contribution by the employer to the provident fund, the deduction will be to the extent of 12% of salary. Earlier also it was like that, but earlier was contribution by the employer to the provident fund, let's say 15%, less exempt 12%, balance taxable 3%. Now it is not like that. Whatever is the contribution, first is your gross receipt, meaning by disclosure norm. Whatever is the house rent allowance received is your gross receipt. Now you produce a house rent receipt, claim the deduction, meaning thereby earlier we used to give bogus receipts, or earlier we used to say the expenditure has been incurred for official purposes, that's not taxable, and we used to write exempt, exempt everywhere. But now please note, first you have to treat it as an income, then claim deduction. So disclosures will have to be done for each and every item, whether it is children education allowance, a house rent allowance, or a conveyance allowance, or a transport allowance, or any other allowance which you receive. First will be added to your income, and then you can claim a deduction. Barring this, there is no other change in the house property. Gratuity remains exempt up to rupees 10 lakh. Leave encashment remain exempt up to rupees 3 lakh. There is increase. Medical reimbursement now will be increased to from 15,000 to 50,000. So there will be improvement that medical reimbursement will be exempt to the extent of 50,000. But LTC has not been given exemption at this moment. But they have promised they will be giving that exemption also. Coming back, sir. I was not interested to waste my time to the salary. The most important, first I'll take my time to the capital gain, and then I'll come to others. Sir, there is complete change in the chapter on capital gain. Absolutely changed. First thing, there is no difference called short-term or long-term capital gain. First thing is this. And capital gain is taxable at ordinary source income. Now, what is the rule? Now, please try to see this side. A capital asset has been divided into two parts. One is called business as capital asset. Another is called investment asset. Sorry, business asset, investment asset. I'll talk about investment asset later. Now, this business asset has been divided into two parts. Number one is business trading asset, and number two is business capital asset. If you transfer a business trading asset like stock, raw material, finished goods, there is business income. But now wait, if there is a business capital asset used for the purpose of business, now if you transfer that, there is a profit. It will not be called short-term capital gain. It will be called business income. Now business capital asset other than land, whether it is plant, machinery, furniture, building, tangible asset, intangible asset, or any kind of asset which is used by the assessee for the purpose of carrying on his business, there will be, if at all there is a profit, it is going to be business income. There is no question of Section 50 short-term capital gain. It will be a business income. Now, this is business asset. Now coming to investment asset. Please look here, very important. This investment assets have also been divided into two categories. Number one, equity shares of listed company, units of the equity-oriented fund. This is first category. Second category, all other investment assets. So now assets have been divided, investment asset, two categories, equity shares of a listed stock company and units of the equity-oriented fund. Let me take this first. What is written, please be particular, section 59, subsection 2, what does it say? If equity shares of a listed company or a units of mutual funds have been sold through recognized stock exchange and security transaction tax has been paid, and if they were held for period more than 1 year from the date of when it was acquired. Please note the word, more than 1 year from the date of acquisition. Now, earlier it is section 1038 exempt. Now they say, don't say exempt. Calculate capital gain. If it is held for more than 1 year from the date of its acquisition and it is sold through recognized stock exchange or it is a unit of the equity-oriented fund. They say calculate capital gain. Suppose I buy share for 100 rupees. I sell it for 240 rupees. There is a capital gain of 140 if I sell it after 1 year. Now please note, this 140 rupees is the capital gain you have computed. Now claim 100% deduction and balance is taxable. The word used is not exempt. The word used is claim 100% deduction, first compute capital gain, then. Now what was happening these days? Everything which you were holding it for more than 1 year, you were claiming exemption and nowhere it was shown. Even number 2 money invested in the share, there was nothing to be shown. Now disclosure norm, every shares which you are selling through recognized stock exchange and you are holding for a period more than 1 year, first you will have to calculate capital gain. After calculating the capital gain, claim deduction and the balance is taxable. Balance is nil. Now other way around, if there is a loss, suppose 100 rupees shares sold for 40 rupees, there is a loss of 60 rupees. This loss of 60 rupees you will first calculate. After calculating the loss, there will be scaling down by 100%. Scaling down by 100% means loss will be reduced by 100%, so the net loss will be 0 and there is no question of any loss to be set off. Wait a minute, disclosure. Now earlier loss was there, not allowed to be set off, nowhere it was shown. Now if it is a loss, first calculate loss, then claim 100% scaling down and the balance loss is nil. Second point, sir, very important, no short-term word I'm using. You know, one thing I'm telling you, whenever you're reading or you're listening to any media, kindly do not listen to anything which is relating to technical points. Media will always give you wrong information. Do not read even the paper unless it is an article written by some good person. Otherwise, there is a mistake which they always come out. When I came to when I was reading this direct tax code came, media was writing, in case of a short-term capital gain from these shares or equity-oriented fund, there will be a tax liability to the extent of 5%, 10% or 15%. I was reading in the direct tax code, there is no word called short-term capital gain and there was no word called 5%, 10% or 15%. Then why this was used? Wait a minute. Now please try to read, listen to my language, what is said. When these shares or equity-oriented funds are transferred through recognized stock exchange and they were held for a period of 1 year or less, please note the word 1 year or less from the date of its acquisition, 1 year or less, Then calculate capital gain. Okay, I'll calculate. Suppose I have bought the share for 1 lakh, sold for 2,30,000. Capital gain 130. I have not used the word short. I have just said held for not more than 1 year. 130